Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, let's run you through the note coming in from Jefferies on metals itself. And they are fairly positive. They note that the Indian metal stocks, they've underperformed some of the global peers in 2023 so far. And they believe that, in fact, now they're presenting a buying opportunity. Their top buy pick is Tata Steel. Target price comes up for you in the screen. And followed up by Hindalco, whose target price they're placed at around 570 rupees odd. They've given 5 broad factors, so let's run you through that. First is the Chinese economic data is looking up. Both the manufacturing PMI as well as the property prices have started to stabilize, so they like that. Next up, on Chinese pricing itself, it's seen a good rebound. Remember, it was down more than 20% in the last year, but it's up close to around 14%. And the inventory levels in China, adjusted for seasonalities, are the lowest we've seen in the last 4 years. So that's the second data point. Next is on the India steel prices. Well, it corrected in the last year by close to around 13%. It's up by close to around 8%. And it's around that 60,000 rupees per ton, which is the level that they're working with for the next couple of years as well. That's FY24 and FY25. The important aspect to highlight out here is that they say that domestic prices are at a discount in comparison to imported steel that's coming in there. So that's giving a bit of a cushion on the pricing aspect. The fourth point they make is that Asian steel spreads, well, they've recovered from around $185 per ton to around $225 per ton. But it's still lower than the long-term average. So there is still scope for improvement from here on. And finally, on the non-ferrous side, they say that, yes, LME prices, well, it's more or less flattish in this year after falling more than 15% in the last year. But thermal coal costs have cooled down. So that's what's supporting spreads. So all these 5 factors put together, Jefferies are fairly positive on the metal space.
Right, Nigel, thanks a lot for that. That explains the kind of up move that we're seeing in a couple of these metal stocks. The index continues to hold at lower levels, close to around 17,700 thereabouts, down 60 points. But importantly, if you just take a look at the frontline index as well as the mid-cap index, you will see a sea of difference in the market itself. The frontline index, of course, is pressured lower by a couple of these stocks. ITC is at the low point of trade. Big boy Reliance is well down about 1.5%. All the Adani Group stocks under pressure as well. These are the index stocks that we're talking about. Adani Ent down 5%, Adani Ports down 2.5%. M&M is the other one, which is lower as well. But if you just take a look at the broader markets, we have 1.5 stocks in the green for about every stock which is in the red. So nearly 3 stocks advancing for 2 declining. And the mid-cap index at an index level is outperforming as well. And that is something which will give bulls a fair amount of hope for a second half rally. Important to watch out for a bunch of stocks which are picking up as we speak. Delta Corp is one of them, which has moved to the high point of trade. Shriram Finance has been doing well all this morning and now has moved to the high point of the session. And Jubilant Foodworks as well picks up from the lows of today's trading session, up around 1.5% from the lows. With that, we are out of time on this edition of Chartbusters. You stay tuned to CNBC TV18. Trading Hour comes up next.
Brought to you by